Hi, this is Joe from PrepAgent. Today, I want to go over a purchase money mortgage. So what is a purchase money mortgage? It is also known as seller or owner financing. This is usually done in situations where the buyer cannot qualify for a mortgage through traditional lending channels. A purchase money mortgage can be issued in situations where the buyer is assuming the seller's mortgage, and the difference between the balance on the assumed mortgage and the sales price of the property is made up with seller financing. Sounds tricky. Let's break this down. Rather than obtaining a loan through a bank, the buyer provides the seller with a down payment. The buyer and the seller agree on an interest rate, monthly payments, and loan terms. Then the buyer pays the seller on an installment basis. This does not pass legal title to the buyer, but gives the buyer equitable title. Remember, legal title is the right to sell, and equitable title is the right to use and possess. The seller retains the right to sell in case the buyer does not make the payments as agreed upon. A lease purchase agreement means the seller gives the buyer equitable title and leases property to the buyer. After fulfilling the lease purchase agreement, the buyer receives the title and credit for part or all of the rental payments towards a purchase price, and then typically obtains a loan for paying the seller the balance. So what are the purchase money mortgage benefits for the buyer? Number one, even if the seller requests a credit report on the buyer, the seller's criteria with the buyer qualifications are typically more flexible than those of conventional lenders. Number two, buyers may choose from payment options such as interest only, fixed rate amortization, less than interest, or a balloon payment. Number three, down payments are negotiable. If a seller requests a larger down payment than the buyer possesses, the seller may let the buyer make periodic lump sum payments towards a down payment. Number four, closing costs are lower. Number five, without an institutional lender, there are no loan or discount points or fees for origination, processing, administration, or other categories lenders may routinely charge. Number six, because buyers are not waiting on lenders for financing, buyers may close faster and receive possession earlier than with a conventional loan. So what are the purchase money mortgage benefits for the sellers? Number one, the seller may receive full list price or higher for a home when providing a purchase money mortgage. Number two, the seller may also pay in taxes on an installment sale. Number three, payments from the buyer may increase the seller's monthly cash flow, providing spendable income. And number four, sellers may also carry a higher interest rate than in a money market account or other low-risk investments. That's all for now. I hope that helped you understand a little more about a purchase money mortgage. This is Joe from PrepAgent, trying to make complicated concepts a little more simple.